Most people use AI to draft emails or summarize articles. Meanwhile, they leave the process of wealth accumulation to slow, manual, and often inconsistent routines. The AI Dividend Loop is a system designed to run 24/7. It identifies dividend payouts the moment they arrive, analyzes the underlying assets, and executes a reinvestment strategy based on real-time data. To build this today, you need an active brokerage account and access to two specific AI tools: a text-based model for earnings analysis and a real-time search engine for market signals. Building this system changes your relationship with the market. You are no longer just holding stocks. You are managing a compounding engine that operates according to a preset technical architecture. This architecture has three isolated layers: execution, data, and logic. The execution layer, your brokerage, routes the actual trades. The data layer provides intelligence via static earnings reports and real-time macroeconomic data. Finally, the logic layer translates that intelligence into action, instructing execution based on data. The loop is triggered the moment a dividend payment clears and appears as cash in your account. The foundational rule of the system is that cash is never allowed to sit idle. As soon as the capital is available, the analysis begins. Decoupling the data analysis from the trade execution prevents the common delays found in manual investing. The system does not wait for a user to find the time to log in. It moves as soon as the criteria are met. First, the system extracts the ticker symbol from the payout, feeding it into the AI environments. The AI then conducts a three-point evaluation. First, it calculates the current market valuation to see if the stock is priced fairly relative to its historical averages. Second, it scans for current market sentiment and any breaking news that might impact the company's short-term performance. This chart shows the third check: payout sustainability. The AI reviews cash flow to determine if the dividend is at risk. These 3 points produce a binary conclusion, flagging the asset as a buy or marking it as overvalued. Using an AI without real-time search capabilities is a point of failure. Without current data, you risk reinvesting into a company that just released a negative guidance report that hasn't hit static datasets yet. This algorithmic check is more selective than a standard automatic reinvestment setting, which buys more shares regardless of whether the stock is currently expensive or cheap. The AI's conclusion maps to a logic matrix with 3 outcomes. If undervalued and sustainable, the system reinvests directly back into the company. If overvalued, it routes capital into a different, higher-yield asset. If signals are negative, capital goes to a cash reserve. Which part of your current investing workflow do you find the most tedious? Let me know in the comments. Once the AI provides the path, you simply mirror that action in your brokerage account to complete the loop. This 3-path matrix replaces open-ended decision-making with a fixed workflow. It ensures that every dollar has a predetermined destination, preventing capital from sitting idle while you decide what to do. Over a 90-day window, this system increases the frequency of reinvestment events, creating a separation in growth. In contrast, the lower line shows gaps from manual reinvestment. The curve stalls whenever cash sits idle for days or weeks before being put back to work. AI provides a significant increase in execution speed. It functions as a filter, condensing several hours of manual research into seconds of objective data. In the US markets, mathematical consistency and execution speed are primary advantages. Moving capital efficiently separates an active system from a stagnant one. You now have the architecture to automate your own dividend reinvestment process. If you want the specific AI prompts I use for the logic layer, hit like and subscribe, and comment "Automate" below.